We were all taught the same story. Study hard, get a good job, earn a high salary, and somewhere along that path, wealth will follow. But it doesn't, because income doesn't equal wealth, and a high salary doesn't mean financial freedom. Every month, millions of people, doctors, engineers, executives, earn great incomes, yet feel broke. They earn more, spend more, and save less. The cycle never ends. Meanwhile, a smaller group, often quieter, less flashy, earns the same money, but somehow they break free. Their money starts earning for them. They don't just work for cash flow, they build it. In this video, I'll teach you exactly how to do that, step by step. You'll learn how to turn your salary, business profits, or side income into a cash flow engine that pays you for life. This isn't about getting rich overnight. It's about building freedom, slowly, quietly, permanently. Class begins. Let's start with the foundation, the cash flow equation. Cash flow equals income minus expenses plus asset-generated inflows. For most people, this equation is broken. They focus only on income, their salary, commissions, or business revenue. They ignore the most important part, asset-generated inflows. See, there are 3 types of income. 1. Active income. You trade time for money. Jobs, consulting, freelancing. 2. Semi-passive income. Money works a little for you. Rent, dividends, part-time ventures. 3. Passive income. Money works entirely for you. Royalties, business ownership, compounding assets. Most people stay stuck at level 1 forever. They depend completely on active income. So when they stop working, income stops too. The wealthy? They spend their entire lives climbing the ladder, using active income to buy assets that push them upward. Salary, ETFs and REITs, dividends, reinvest, bigger assets. Cash flow grows. That's the cash flow loop. And every wealthy person, whether an investor, entrepreneur, or retiree, lives inside it. Here's the math. The rich understand. If your monthly expenses equals 1 lakh rupees or $1,500 and your investments generate 1 lakh rupees in monthly cash flow, you are financially free. Not rich, not retired, but free. That's the difference between a life of pressure and a life of purpose. So here's your first realization. Financial freedom isn't about earning more. It's about redirecting what you already earn into income-producing assets. In Chapter 2, we'll build on this. I'll show you exactly how to turn your income into assets, step by step, no matter your current salary. Most people think the problem is low income, but the truth is, the problem is low conversion. It's not how much you earn, it's how much you convert into assets. The wealthy don't patch the bucket, they redirect the flow. They channel income into assets before it can leak into lifestyle. The rule: pay yourself first. This is the foundation of wealth. When income arrives, the average person pays everyone else first, landlords, credit cards, utilities, and saves what's left. The wealthy do the opposite. They set aside a fixed percent of income for assets before expenses. Think of it like a tax you pay to your future self. 20% of every paycheck goes into investments, automatically, non-negotiable. If you earn 1 lakh rupees, 20,000 rupees goes into ETFs, REITs, or gold funds the same day. If you earn $5,000, $1,000 flows to your asset account. Over time, this 20% becomes a second income stream. The poor spend first and invest last. The rich invest first and spend what's left. The modern evolution, the 50-30-20 framework. Most people know this rule for budgeting. 50% needs, 30% wants, 20% savings. But the wealthy evolved it into something far more powerful. 50% living costs, fixed essentials, housing, utilities, transport. 30% asset building, investments, business ownership, skill building, REITs. 15% reserves, cash buffer or emergency fund. 5% joy fund, pure lifestyle, guilt-free spending. You don't invest when extra money appears. You invest because it's built into the system. When you begin this process, it feels small. At first, 500 rupees or $20 a month seems trivial. But remember, wealth doesn't grow linearly, it compounds. So here's your second rule of freedom. Don't work harder to earn more income. Work smarter to convert your income into assets. In Chapter 3, we'll explore the types of assets that produce real cash flow and how to identify which ones fit your journey best. Now that you know how to redirect your income, it's time to learn where to send it, because not all assets are built the same. We'll now explore the 5 pillars of cash flow producing assets, the core engines that generate income quietly, predictably, and for life. 1. Dividend stocks and ETFs. These are companies that share profits with shareholders through dividends. Think of them as mini cash machines that send you money every quarter. Dividend ETFs bundle multiple such companies, providing instant diversification. Example: U.S. investors rely on the S&P 500 dividend aristocrats, companies that have increased dividends for 25+ consecutive years. Indian investors use Nifty Dividend Yield Index or blue-chip stocks like ITC, Coal India, Infosys, or HDFC Bank. Typical yields: 2-5% plus long-term appreciation. Purpose: core growth plus consistent passive income. 2. Real estate and REITs. Real estate is the oldest wealth engine, tangible, predictable, and inflation-resistant. Direct ownership, rental income, appreciation, leverage. REITs, real estate investment. Trusts, fractional ownership of commercial properties, paying regular dividends. Example: Embassy REIT or Mindspace REIT in India. Purpose: stability, inflation hedge, and long-term compounding. 3. Bonds, G-Secs, and treasury bills. These are loans you give to governments or corporations in exchange for interest. They don't make you rich, but they protect and pay consistently. Government securities equals low risk, low yield. Corporate bonds equals moderate risk, higher yield. Example: RBI's sovereign gold bonds in India, U.S. Treasury 10-year notes or municipal bonds. Purpose: income stability and protection in market downturns. 4. Commodities and gold. Gold doesn't generate cash flow, but it preserves value, acting as an insurance policy for your cash flow portfolio. Silver and commodities, ETFs can add inflation hedges. Example: during 2008 and 2020 crashes, gold outperformed equities. Purpose: hedge against inflation, currency devaluation, and crisis events. 5. Digital and alternative assets. In the new economy, digital assets have emerged as scalable income sources. Digital products, courses, ebooks, AI-based tools, templates. Online royalties, YouTube monetization, podcasts, affiliate income. Example: a YouTube channel earning ad revenue is just like a REIT paying monthly rent. So here's your third realization. True financial freedom doesn't come from one big win. It comes from multiple small streams of income flowing together like rivers feeding an ocean. In Chapter 4, we'll learn how to build your own Cashflow Flywheel, a system that reinvests your income into more assets, creating unstoppable compounding. Cash flow is powerful, but when you reinvest that cash flow, it becomes something extraordinary. A flywheel, a self-sustaining engine that grows stronger with every turn. What is a flywheel? In engineering, a flywheel is a rotating mass that stores energy. It starts slowly, but as you keep adding force, it spins faster and faster until momentum carries it forward effortlessly. Wealth works exactly the same way. That's when you stop pushing and start gliding. The 4-stage cash flow flywheel. Stage 1, active income, asset investment. You use your job, business, or freelance income to buy cash flow assets, ETFs, REITs, dividend stocks, rental properties. Each purchase becomes a small wheel turning. Stage 2, asset, cash flow returns. These assets begin paying dividends, rent, or interest. Even if it's just $500 or $10, it's fuel. Every payout is a spark of financial independence. Stage 3, reinvest. Compounding begins. Instead of spending that income, you reinvest it. Buy more shares. Add to your right. Increase your bond ladder. Your flywheel spins faster. Example: 10,000 rupees invested monthly at 10% return for 10 years equals 20 lakh rupees. Stage 4, compounding. Freedom. Eventually, your assets start generating more income than you contribute. You move from working for money to managing money that works for you. This is where your flywheel becomes self-sustaining, the point where even during recessions or job breaks, your cash flow continues. So here's your 4th realization. Wealth isn't an event, it's a system. When you design your finances like a flywheel, small, consistent inputs create unstoppable momentum. In Chapter 5, we'll zoom out to see how the wealthy structure their income streams, layering active, passive, and legacy income into a complete wealth ecosystem. By now, you understand how cash flow assets work and how reinvesting creates a compounding flywheel. But here's where the wealthy take it to another level. They don't rely on one flywheel. They build many, because one income stream is fragile. But 5? That's freedom. Let's break down the 4 levels of income that the wealthy structure. 1. Active income. The starter engine. This is what gets your flywheel spinning. Your job, business, or freelance work. It's not bad, it's fuel. But the goal is to convert as much of it as possible into assets. Earn actively to invest passively. 2. Semi-passive income, the bridge. This includes rental income, dividends, REITs, or side hustles that don't require daily attention. They provide stability and small inflows that can be reinvested. It's the bridge between dependence and independence. 3. Passive income, the freedom layer. This is the dream zone. Assets that work even when you sleep. Fully paid rental properties. Dividend-paying portfolios. Royalties, online products, and digital assets. These flows create time freedom, not just money freedom. 4. Legacy income, the generational engine. This is income that outlives you. Trust funds. Real estate portfolios passed down. Global ETFs, compounding funds, or royalties left to heirs. The poor think about the next salary. The rich think about the next generation. So here's your 5th realization. Freedom doesn't come from one stream of income. It comes from many small rivers flowing into one ocean, your financial independence. In Chapter 6, the final chapter, we'll put everything together. I'll show you how to design your personal cash flow system, step by step, with a closing blueprint that can change your financial destiny. We've talked about the psychology. We've broken down the assets. We've studied the flywheel. We've seen how the wealthy build multiple streams of income. Now it's time for you to build your own cash flow system. Step 1. Map your current income and outflow. Open a blank sheet or spreadsheet. Write down your monthly income, salary, business, side hustle, monthly expenses, needs, wants, EMIs, debt. This is your financial mirror. You can't build freedom if you don't know where you stand. Step 2. Decide your conversion rate. Ask yourself, what % of my income can I convert into assets every month? Even if it's 10%, start there. That 10% is your seed of freedom. Automate it. Make it non-negotiable. Because consistency beats intensity every time. Don't wait to have more money to start investing. Start investing to have more money. Step 4. Automate, reinvest, repeat. Set up auto debits or SIPs for your asset categories. When dividends or rent arrive, reinvest them immediately. Don't let cash flow become comfort. Let it become compounding. Every inflow is a worker. Don't let them sit idle in your account. Put them back to work. Step 5. Track monthly, adjust annually. Wealth isn't about guessing, it's about reviewing. Once a month, track your income and cash flow growth. Once a year, rebalance. Markets will move, life will change, but your system, your engine, must keep running. Step 6. Expand to legacy. Once your monthly passive income covers your expenses, congratulations, you're financially free. The goal isn't just to stop working, it's to make sure your money never stops working. Most people will spend 40 years working for income, but never 4 years building a system that makes income for them. Don't be most people, because the day your assets start paying you is the day you're free. Subscribe to keep learning how to design freedom through money, mindset, and mastery. Comment. What's your first cash flow move this month? Share. Send this to someone who's tired of working just for money.